Hi, everyone. Thank you for joining the first executive session hosted by RetailNext to discuss both U.S. store trends over the course of 2023 and 2024, as well as get into some holiday predictions for what our retailers might be able to expect as we get into the Black Friday, the Christmas, and the main holiday shopping periods of 2024. And with that, I'll be joined by Andrew Neelon of OneRec.
Thanks for inviting me here today. Always excited to be a part of RetailNext initiatives. And so I'm Andrew Neelon. I'm founder of OneRec, which is a platform of tools, templates, guides, resources to help brands get offline faster and on their own. I also am a development executive at Elase Med Spa, which is a national med spa chain.
And for those of you who might be a little bit unfamiliar with RetailNext, we are RetailNext. We are the pulse of the store. We provide data that enables retailers to deliver a more responsive and customer-focused experience within their physical brick-and-mortar retail stores. We work with over 500 brands and have been a trusted thought leader on physical retail traffic trends for the last decades. And with that, I'm very excited to get into a little bit more details about what the executive sessions are going to be focused on. So these sessions are an extension of the annual RetailNext Executive Forum, which is used, as an incubator for those deepened connections and conversations between retail executives. And, our main goal of these is to build a loyal community of retail executives that will help to provide deeper conversations around the state and the current state, as well as the future state of retail and what we can all expect to see as retail continues to develop and transform over the coming years. And over the course of today's executive session, we're going to talk through a few items regarding the latest traffic trends in both the U.S. overall market, but then specifically focused on the apparel and footwear sectors, then getting into some holiday 2024 predictions for when we can expect to see peak traffic trends. We're going to discuss also a brand new survey sponsored by RetailNext to understand the overall U.S. consumer sentiments around shopping behavior, what is driving customers to make purchases or not purchases. We're really excited about this data. We've got a lot of great details to really understand the mentality of customers and what is really helping them to convert or not convert in various physical brick and mortar stores. And then with the last item, we're going to discuss some best practices to really optimize stores against market trends and how to really use the data in both a real-time and kind of historical perspective in order to better optimize and make the store more efficient in its ability to convert the customers who enter. Kind of going back to the beginning of 2020, right after kind of stores started to open up again after the COVID pandemics and some of the lockdowns. So what we really saw during that time period, as everybody saw, was very large declines at the beginning of 2020 when things started to open up. We then saw in 2021 trends started to reverse a little bit with large growth, and then we've seen a lot of stability over maybe the last year or two as we've started to get back into kind of the new normal, with trends being fairly flat year over year, but really over the last 2020, mid 2023 up to kind of current date, where we're seeing stability in that slight decline from a traffic perspective, with sales for the most part slightly under indexing what we've seen from a traffic perspective, really getting into the point around how conversion and getting shoppers to convert is becoming a bit more of a challenge as customers are becoming more discerning and maybe more looking for the best deals or the best brands in order to make purchases at this time.
Yeah, and just to add a couple thoughts to that, would echo everything you've said. And I think what's really interesting, anytime I look at data, I like to also think about how does this correlate with other data points that I'm seeing or other anecdotes that I'm hearing. And I think two interesting things kind of immediately come to mind. The first of which is, I think a lot of shoppers now are a lot more tech savvy, a lot more digital savvy, and a trend that we've always seen, and I think is becoming more amplified coming out of COVID with people getting more comfortable shopping online, is just the continued trend and behavior of browsing in store but buying online, and browsing online even more. And so I think it's really interesting to see that the stable traffic trends, the stable sales trend is a little bit below zero here on average. post-COVID, and I think a lot of that also has to do with just the general where people are transacting. And so it's kind of in times like these that I always like to encourage people to not just look at the foot traffic data and the sales data on a four-wall basis, but also to consider what's happening online in those markets where you have stores, so that you're really getting to see the whole picture. And the other interesting observation is how this kind of seems a little bit counter to some of the more recent observations that real estate vacancies are at almost all-time lows at the moment. It's a really tight real estate market. It's hard to find good vacant spaces, despite the fact that we're seeing traffic come down steadily a little bit. But I believe that that is more to do with the lack of new construction and new retail development than anything else. But I think just another interesting observation that may seem a little bit counter to what we see here.
Great. Thanks, Andrew. And then wanted to just take a quick deep dive into the 2023 trends to really kind of focus on, what we're seeing, last year that's really going to inform what we're expecting over this holiday period for 2024. So to take a look at overall deep dive straight into 2023, what we were really seeing over that time period is that traffic was down about 1% year over year for 2023 compared to 2022. But we did see a larger decline in sales. So sales was down about 3% over that time period, really going back to that point around, that tougher market to maybe getting those consumers to make that purchase. We saw, despite traffic declining, we actually also saw conversion decline by about 1 percentage point as well, with, UPT going down a little bit, AUR, or average unit retail, up, kind of reflective too of the inflationary market, maybe making those customers a little bit more challenged, right, with their basket. They're not able to purchase quite as many units. They're having to purchase a little bit more expensive products, and that's ultimately driving down to a slightly smaller basket. But ultimately, what we ended up seeing when we got towards the holiday period, which is really, the most important portion of this, is that there's key dates in the holiday, right? So around the Black Friday week, that last week of November, that last week right before you get into Christmas, that's really when we started to see a little bit more of an uptick in traffic trends. So if we look maybe towards the top right of the slide that I'm sharing here, what we did see is that Black Friday in 2023 compared to Black Friday in 2022, despite overall market trends being slightly down, we did see that Black Friday was up about 2%. The whole weekend was up about 1.5%. And then when we get into the closer time periods around Christmas, we're seeing a huge increase in the Super Saturday volume for same date compared to maybe the Friday before. We were seeing about a 26% increase in traffic trends. So really seeing over that holiday time period, much more focus and growth on traffic as those shoppers really kind of use the events of holidays around Black Friday, Super Saturday, the day before Christmas Eve, to really do their last minute shopping. And that really drove consumers to go to stores and then ultimately, potentially make a purchase right before the holiday.
And the other really interesting, I always find holiday data so fascinating, because when you think about holidays and how they're tied to promotionality, and then you kind of take a step back and think about how a business is managed, and candidly, the politics in retail holidays and comp metrics is something that I've observed is a lot of brands, if they want to comp a prior year's month, and they're finding that they can't get there without doing more promos. The obvious answer is, let's do more promos. And I think we've seen a lot of big box retailers extend the window of holiday shopping. And what I think that kind of unfortunately comes at the cost of is your everyday sales and your everyday comp rate. And so it's always interesting to see in a trend like this, where the everyday comp rate is kind of down, but certain holidays have big spikes. And I think is an interesting reflection of how people are managing to their KPIs and managing to really prioritizing growth over holiday periods as opposed to prioritizing growth over your everyday period. So the holiday trends are always just a really fascinating one to kind of take a peek under the hood and see what's really going on and driving that behavior.
And Andrew, not to put you on the spot with a question here, but kind of, what are your thoughts on maybe driving those sales more towards the holiday period versus, maybe giving up a little bit in the kind of more, outside of the holiday period? Do you think that's an effective strategy? Do you think that, there's other things that retailers should consider when they're making those final decisions of, do you want to drive sales over the holiday outside of maybe your more kind of regular shopping periods?
Yeah, I think it's a little bit of a double-edged sword. So I think when it's one of those things that you don't really notice until it's probably too late when you've seen the trend, as if, even it could look like a chart similar to this where you see and you can measure like what is your average daily sales on promo days, which tend to be holidays or right around then, versus your average daily sales on non-promo days. And what I've seen in the past pretty commonly is non-promo ADS, your average daily sales, starts getting soft, so everybody puts a lot more pressure on the holiday. So they either put more marketing dollars into those specific holiday days, or they elongate the amount of holiday or promo days exist in a month. And so as you kind of look at over time, like you can imagine a graph showing percentage of days that are promo versus your average daily sales on non-promo days. A lot of times it's a negative correlation because they're pulling sales into those promo periods. They're pulling demand into those periods, which are also lower margin generally. And you'll see over time that correlation begin to fill up a graph. And by the time you realize that the trend is there, you're like, oh no, what have I done? So I think it's important to prioritize both, and it just kind of comes down to, are you prioritizing short-term wins, or are you prioritizing a long-term healthy brand? And you don't have to be on one complete end of the spectrum or the other. There is a healthy middle, and that just depends on, every brand's particular circumstances, and perhaps more importantly, what their investors are expecting of them and what they've signed up for.
Great. Makes sense. Thank you. Great. So getting into kind of what we've seen as well over the course of 2024, and then we'll get into some predictions around what we might be able to expect around the holiday period. But, I think as through the year of 2024, we have continued to see those slightly declining trends, at least for the overall US market, right? So we're continuing to see sales slightly more negative than what we would expect just from a traffic. So traffic so far through 2024 year to date been down about 3.1% versus sales being down about 4%. Conversion at that rate has improved a little bit compared to what we saw from declines in 2023, but it still is slightly down by about 0.3 percentage points. Again, those sales declines and those larger sales declines continue to be driven a little bit more by the inflationary market. Even though inflation has improved over the course of 2024, we're still seeing that average unit retail up about 3% compared to last year, and that UPT is down close to 2 points. So still seeing that basket declining, that increased unit, ultimately leading to a more expensive basket, but a smaller basket for our customers as well. And throughout maybe, the holiday period, we expect that to shift a little bit, but overall, we still would expect that, these trends are going to fairly hold, and that we would expect, maybe slight declines outside of the event holiday shopping periods, which we will get into in a few moments as well. Finally, to get into specifically regarding the apparel and footwear segments of what we've seen in 2023. So focusing primarily on the blue and yellow lines in this view, we have seen that typically apparel and footwear tended to have its best weeks kind of around, we did see some benefits kind of around that kind of back to school period, as well as kind of the late summer into the holiday periods. There were some more positive trends. Easter shifts and Mother's Day shifts were also driving some positive trends in the apparel and footwear segments. But for the most part, again, we are still seeing that kind of flat to, maybe some weeks we're seeing some positive trends, but for the most part, right, it's consistent with the overall US market. And then there have been declines in both those segments as well, outside of, again, some of those holiday time periods, which was really driving some of the, more positive trends over the 2023 categories at that time.
And just to add some, again, just some kind of observations and anecdotes that I think kind of pair nicely with this. I think with apparel and footwear, more so on the apparel side, I think this kind of is one of the categories that is probably most affected by the migration of shopping behaviors onto online. With the rise of Shopify brands, and it's just so easy to start specifically an apparel brand. And I think a lot of apparel retailers, unfortunately, just haven't really thought of more innovative ways to operate, more tech savvy operations, and a better omni-channel kind of experience for the customer. And so it's surprising or unsurprising to see that apparel, is among some of the categories here that we're seeing decline in contrast to, health and beauty and jewelry, which tend to do a little bit better, especially recently post-COVID, in terms of foot traffic in physical stores.
Now, again, using kind of the trends to focus a little bit more on what we might expect for apparel and footwear. So to kind of make this a little bit easier, we've removed some of the other categories here, but we've still left their trends as well at the bottom of the slide. But again, in 2024, we're still seeing that kind of continued, slight decline in traffic trends for both our apparel and footwear segments. We did see large growth during that shift of Easter in March, but that's a little bit of maybe fool's gold in that case, because it's just a switch of the traffic trends kind of as we saw people gearing up for Easter, really driving that trend. And then we saw that decline the next week as, we saw in 2023, people were really shopping more for those goods. And then we saw that decline in 2024. But unlike apparel, which was fairly consistently, slightly negative, we did towards that early August period, as you really kind of get into maybe, some parts of the country really getting into their back to school shopping, other parts maybe, just starting maybe early back to school shopping. That was really when we did see a bit of a more positive trend. I'm talking more so August week 1, August week 2, all the way up through that first week of September. When we're seeing those footwear trends really be a little bit more positive in that, 2 to 5% increases year over year. It was a little bit surprising that maybe we didn't quite see that same level with apparel, but, footwear really were showing that kind of back to school driver of increasing shopping activity in those footwear brands, over 2024. Then just to kind of showcase a little bit more around, regional traffic trends, we're not at this point seeing large differences on the aggregate level, at least in 2023, for when we were seeing, variations between the Midwest, Northeast, South, and West. All of those were down about 2 points to about 3 points year over year. Now, individual weeks will show larger variances, but for the most part, those trends have been fairly consistent regardless of, regions. We will get into some more details around states and what we've seen, but I think the story is fairly consistent that, in the aggregate, we are seeing kind of the national trends are really also applying to individual regions within the United States as well.
Yeah, and I was just gonna say, when we were looking at this the first time, a few weeks ago, I was a little bit surprised to see some of the regional breakout. I would have thought, with all the headlines and news around and the data around people migrating to the South and to the Midwest, I would have expected to see those be kind of on the lower end of the spectrum of decline. So pretty fascinating to see that's not the case. But also, to your point, pretty consistent view that overall traffic is in a little bit of a slump.
Definitely. Yeah, and I think we've continued to see that trend kind of hold throughout 2024. Again, those declines are, a little bit larger than what we saw in 2023, but outside of, maybe various weak volatility due to, some specific weather patterns, right? Especially maybe in the South where we're getting some more extreme weather. But in general, again, in the aggregate, the trends are fairly consistent kind of across regions. So again, 2024, Jan to September, seeing that trend about -3 across all the regions. And then when we get into some specific states, as Andrew had mentioned, we did provide a bit of a view, looking in particular at some of the key southern states that we've looked at, Florida, Georgia, Texas, where there's, more of those stories around more migration. And we've used, California and New York kind of as a control to look at, those states where you would expect to see maybe a little bit more migration, especially in, New York City around the COVID time period, all those stories about people moving, maybe not to, outside to, southern states or, Texas in that case, but moving more to the suburbs or maybe, some of the, surrounding northeastern states. But, what's been interesting from my perspective is that even though we've seen and maybe expected to maybe see declines in some of those states like California, New York, we've actually seen those states be some of the more strong states for actually returns to traffic, right? So those states in particular, California, New York, were actually hit the hardest by COVID during that time period, right? Down about 40 to 45%. But then they also saw the biggest returns after COVID. And then even since then, since 2022 March to date, those two states outside of Florida have really been driving a lot of the growth that we've seen. Now, Florida has also been a really big driver of growth at about plus 4.5% compared to, the same time period of the last few years. But really, what I guess was maybe a little bit more surprising is that we haven't quite seen that same growth in Georgia and Texas. We've really been seeing more flat to, maybe slight declines year over year in those states in particular, with really a lot of the growth being driven by, Florida, New York in particular, and to a lesser degree, California.
And I think another interesting thing here is, I think this really speaks to honestly just the strength of New York, and I say that as a New Yorker myself, strength of the market for retail. New York, it truly is the center of retail, not just in the country, but I would say arguably in the world. And the shopper is strong here, whether it's tourists or locals. People are still here spending money in stores, and they're here for that physical retail experience. So it was both surprising, but also not surprising to see it showing such strong visitor traffic data.
So what we've done in this case is we've looked at the 2023 trends leading up to the holiday period, right? So if you just take on average your average holiday traffic, so we're considering November to December as our holiday time period. If we look at just the average holiday time period over that, and we just say that, your average traffic is 1 for that time period, what are we seeing, or what are our expectations for outside of that average day? What is the Black Friday going to look like? What is Super Saturday going to look like? And I think based on trends last year and based on trends from the previous 5 years as well, we really see a concentration of traffic around what we call kind of our event holiday shopping days. So Black Friday, Super Saturday, maybe 2 days before Christmas, that December 23rd, as people might be doing their final travel on Christmas Eve. We really see more of a focus and a driver of shoppers to stores on those particular days. So last year in 2023, we saw that Black Friday had about 3.1 times average traffic come into the store on Black Friday compared to the average day from November to December. Now, not quite as strong in the last week leading up to Christmas, but we're still seeing even Super Saturday at about 2.3 to 2.1 times average holiday traffic over that time period. And it's continued, and it's fairly consistent, right? Maybe not quite at the 2.3, 2.1, but as we get into that last week before Christmas, from that Super Saturday up to Christmas, is really when we're seeing, traffic trends at about 1.5 to 2x the average holiday traffic. So it really goes to show that our expectations are, while we might be expecting to see a slight decline in overall holiday traffic trends, we expect those big days, Black Friday, Super Saturday, we expect to see some increases as shoppers really tend to flock to stores on those kind of event shopping periods. And I think, from outside research, there's a recent report published by Bain for the holiday period where they expect Black Friday to Cyber Monday time period to have plus 5% increase in sales, up to $75 billion over that time period. So goes to show that while maybe the overall holiday period might be seeing some declines, those big days, those really big drivers, when there's, events, promos, really, those kind of discounts that you have to get out there for. And I think we will have some data to show this when we get in our consumer sentiment survey, is really getting customers, that call to action to get customers into the store and hopefully ultimately make that final purchase. Andrew, any thoughts you'd like to add regarding kind of predictions and kind of what you've been seeing in any conversations you've had with your retailers as well?
Yeah, I think this is pretty consistent with the previous data you had shown around, despite overall kind of non-holiday traffic being a little bit on a decline, holiday traffic being a little bit higher. I think from what I'm hearing and seeing, it's a little bit of a mix of things. It's what I mentioned earlier of just the politics of, okay, everyday traffic is slow. We got to really push people to get into the stores. But also hearing a lot of shoppers who are just a little bit more eager to do more in-store shopping, especially for the holidays. I think as everyday shopping becomes more and more digital, I think people still look to holidays for those in-store moments. And I know for
Yeah.
myself especially, I prefer Christmas shopping in stores because there's an experience element to it. And so I think this also kind of highlights just the increasing importance of truly experiential retail around the holidays, because that's a
Yeah.
much more differentiated experience than what you might be able to find online.
Yeah, and to jump on that point, there was a recent webinar I had done previously too, where there was surveys and really discussed the fact that consumers, when they go into a store, they're not expecting just to go in and make a purchase, right? They want an experience. They want to interact with a knowledgeable brand ambassador, right? They want to feel the product. They want to connect with the brand. So it's really important to, utilize that. When customers are coming in, if they wanted to just make a purchase and not interact with anybody, they could just make that purchase online, right? So when customers are coming in, what are they expecting to see? What are they expecting to experience? And how can our retailers really provide them with that experience to ultimately drive that conversion? And ultimately, though, more importantly, get them to come back and be a repeat customer and enjoy their time in the store so that they are, bringing friends next time or bringing other people, right? Telling people about that to really help to continue to, grow the traffic into the store and ultimately the sales and the conversion that we're getting for our retailers.
I think what's been interesting is there's been a lot more articles about spirit Halloween shops in the last month or so. And I think they're a really awesome example of how those kind, they've been known for their Halloween stores. They apparently are experimenting and piloting these now Christmas shops. And I think that really goes to show just the emphasis on the holiday shopping experience being so differentiated and so unique, that they're doing very, very well for themselves by focusing specifically on those two holidays. So I think it's a pretty fascinating case study in and of itself.
Recently, we conducted a US kind of consumer sentiment survey where we surveyed over 1,000 consumers within the US over the online platform sentiment to better understand kind of modern shopping preferences and ultimately what are those drivers or non-drivers of conversion. So those surveyed were based in the United States. They're between the ages of 18 and 64, and the survey was administered in late August, so between August 21st and August 23rd. So again, to kind of lay the groundwork, we asked these customers to understand how often are they shopping at physical retail stores and outside of maybe grocery, convenience stores, supermarkets, right? We want to understand how often are they shopping in maybe, more apparel based, jewelry based, right? Those kinds of stores. And, we're still seeing really strong responses, right? Customers are still getting into stores, at least, approximately 65% of people who we surveyed are shopping at least on a weekly basis. Very few, only 10 to 11% are kind of in the rarely or never category. So really, customers are still looking to get out to store, looking to get out and experience a brand. And really where we're seeing, more of that kind of growth in the daily shoppers is, those younger shoppers, right? So that group of, 18 to 34 group are really those shoppers who are more likely to shop on a daily or weekly basis compared to maybe those older shoppers, right, in the 45 to 64 category, where they're shopping a little bit less frequently, more in the maybe kind of monthly to rarely category. And I'm actually was a little bit surprised to see this too, is that males were more than twice as likely as females to shop at physical retail stores on a daily basis compared to women. So I thought, that was a little bit surprising from that standpoint. But I think as we'll get into in the next few slides is what this means ultimately from a conversion standpoint, and especially in getting those 18 to 34 or 44-year-old shoppers to actually make a purchase is actually getting to be more challenging than maybe it ever has been because they're more frequently in stores, they're more discerning, they're looking for a product, right, that they're particularly, interested in, and they're not just going to make a purchase just to make a purchase. But we'll be getting into that in a few slides as well.
Yeah, and I think what's also super fascinating about this is now this kind of two different attributes that may seem a little bit counter that will, I think, pose an interesting challenge for retailers in the future, which is younger folks tend to be more interested in shopping more frequently, but they're also a lot more digitally savvy and tech savvy and are tending to be a lot more multi-channel customer journeys before they purchase. And so on one hand, to appeal to the what will be the largest age range as they get older and with more spending power, how do you get them to spend more time and money in the stores, knowing that they also will lean heavily into digital channels? I think will be a really interesting task for retailers ahead.
Yeah. And I think you touched on this a little bit, Andrew, but we also surveyed all these consumers around, how often are they leaving the store empty-handed, right? And overall, it's fairly rare, right? So about only 40% of time, 40% of customers are saying that they are rarely leaving the store empty-handed. 23% are saying it's often. But as we get into the demographics of those shoppers, we are seeing that younger shopper base, right, that 18 to 24 shopper base especially, was the most likely to often leave a store empty-handed. About 35% of those surveyed so that they will often leave a store empty-handed versus only 20% of those consumers saying rarely. And that's essentially flipped from when you get into the kind of older demographics where 47 to 50% of those consumers are saying they rarely leave, and then they're often leaving empty-handed about 20 to 15% of the time. So I think it almost is kind of, as Andrew was saying, kind of the converse of how often you shop is also how likely you are to leave empty-handed, right? If you're in a lot of stores, then it's going to be a lot more competitive to get you to make that purchase because you're browsing, you're looking for the deal. And we'll get into some of the reasons for why. But versus those shoppers who are in there less frequently, those are those shoppers who are much more likely to make a final purchase if we're able to meet the certain criteria that they need in order to make that ultimate conversion. Getting into some of the reasons for maybe why there's been challenges or frustrations or ultimately leading to that lack of purchase. So initially this view is just what are some of those frustrations? So long lines, crowds, out of stocks, those are really the kind of the three main drivers of leading to maybe frustrations with the purchasing product. Now ultimately, this will not always mean that these are the ultimate reasons that they didn't make a purchase, but these are just those other factors that are going to lead to potential frustrations and lead to maybe more a greater likelihood of a consumer leaving the store without making a purchase. And I think ultimately in this case, while there are some minor differences between the demographics, I would say it's a little bit less of a stark contrast between maybe younger or older demographics. They're all generally saying, outside of maybe lack of staff assistance, where we see a little bit more of a difference, but all generally, reporting at similar ratios of, long lines, crowded aisles, maybe out of stocks really driving some issues with frustration. But I thought what was maybe kind of the final interesting point was really around the lack of staff assistance. So in this case, 18 to 24 and 25 to 34-year-olds, only about a quarter of them were reporting a lack of staff assistance as really, being a frustrating factor for them. But there was that 55 to 64 demographic that was reporting about 40% of these consumers were frustrated by lack of staff assistance. So it really goes to show that it might make it more of a challenge in the retail environment, but it's not kind of a one-size-fits-all model to kind of drive the conversion. Within different demographics, within different consumer preferences, different consumers want to maybe be interacted with or kind of discussed product with in a different way based on kind of how they shop and what their experiences are or life experiences are as well.
Yeah, and I think another interesting observation from this is that it's, I think, a reflection of an unfortunate trend that is happening in retail broadly, which is tighter budgets, cutting staff. That tends to be the typical kind of sequence of events, which leads to longer lines because there's not as many people to help check out, which creates crowded aisles, which, limited inventory could also be a part of that, as well as the staff just isn't there as much to help put that inventory out or to scan it in. And so I think a lot of this is probably going to increase as retailers tend to take that typical kind of approach of, okay, softer traffic, softer sales, cut staff. And unfortunately, I think that becomes a bit of a downward spiral. Some of that, I think, to your point, as you mentioned on the lack of staff assistance, at least the stark contrast in the responses between 18 to 24 versus 55 to 64, I think is also potentially going to mitigate some of that downward spiral, as a lot of the younger age ranges specifically, as they kind of mature up and become a bigger part of the purchasing pool, they're a bit more comfortable saying, okay, I'm going to walk around, but I know I can just buy it online, so I'll just go do that when I get home. So I think it's a pretty interesting dynamic and pretty powerful to see the top two or three, or even, you could even argue all of these are really a result of, or can be a result of the pretty common practice of cut staff, cut staff, cut staff.
Yeah. And then getting into maybe more, what is the actual driver of the reason why consumers are walking out empty-handed? It is a little bit different from what we've seen, right? So in this case, the limited inventory out of stock is really what was driving most of the reasons why consumers were walking on empty-handed, right? They're not trading product. They came in looking for product A. You don't have it, they're not going to purchase product B instead, right? They really are looking for what they want. And if it's not there, they're going to walk out and go to another store that might have it. We are seeing, difficulty finding items also a contributing factor, about that 40%. Might also kind of go a little, it's, maybe a different way of around lack of staff assistance, right? Maybe not clearly marked aisles, but maybe also they just don't want to go find a staff member to ask them where these items are for, right? They might just walk out. And then finally, to Andrew's point too, the higher prices than online. So having that more discerning customer who is going to be willing to shop online, is going to understand what prices look like in the online environment, they might be checking in the store to see what that price is going to look like. And if it's substantially different, they, willing to make that purchase, maybe wait a couple of days to get that order online. But, they're not going to be spending that extra money, especially with some of the tighter, the more constraints on wallets, again, in that kind of inflationary market that we've seen with that smaller basket and that higher AUR, really kind of driving the price sensitivity for a lot of these customers as well.
Yeah, and I also thought, agree with everything you said, and would also add that this ironically, I think kind of supports something that I tend to recommend to a lot of new D2C brands who are opening stores for the first time, which is go with an inventory list model, go showroom. And what I've found is, this obviously depends on the category and the general brand and service expectations, et cetera. But it's really hard, especially if you have an enormous amount of SKUs, to curate your first store perfectly with all of the things and to accurately forecast all of those SKUs perfectly. And it just becomes a really big pain to manage that inventory. And your staff is now managing the inventory, taking away from the customer experience, and can become a bit of a drag on working capital. And so what I've found to be a much more simplistic approach, enable an endless aisle experience, and ironically eliminate some of this challenge of limited inventory and out of stock, is by having a showroom model where you can see, one of each different thing, but perhaps you can't buy it in the store itself. And I think as long as that experience and messaging is made very, very clear, and you've enabled a very strong tech experience, such as, being able to scan a product on your phone and add it to the cart so you can buy it when you go home, then I think that helps to eliminate an enormous portion of these reasons why folks leave empty-handed. But again, requires a lot of preparation and training to do that.
And then just kind of a few last questions that we asked about too was, how interested in our customers in using, self-checkout kiosks or cashierless options. And, we do see that there is a decent amount of interest, 43 to 26% of people. So, about 70% of customers are at least somewhat interested in using self-checkout options. And I think as maybe what we would expect, again, from that standpoint of two, when we're talking about lack of staff assistance, right? Those younger demographics, definitely more in the interested category of maybe the self-checkout, versus those older demographics. Those are a little bit more where they're not interested, not very interested. They want a little bit more of that human interaction, a little bit more of that kind of, understanding of discussions with employees, and, really getting to experience more of the brand and the brand ambassadors are in store. So there is definitely an opportunity here, but again, it's not for everybody, and it might not be the right solution for, your retailer in particular.
And I would just add, if you're looking for a retailer who does it really well, at least from a consumer standpoint, Uniqlo does a phenomenal job of it. They keep the lines moving really, really quickly. It's a pretty seamless and very, very easy experience checking out for apparel, which I've found rarely done well. So a pretty good case study for anybody who's curious what good looks like.
And then just the final question that we had asked was, what are those factors that contribute most to maybe making an impulse purchase in a physical retail store? And I think, what we really see is that the biggest drivers are those kind of limited time offers or discounts, kind of maybe going back to that point around, the holiday, the event shopping time period, right? Especially Black Friday, they can often be heavily promotional, maybe around the Christmas time period too, really driving a lot of the need to make a purchase, as well as also too, to some degree, the eye-catching displays or packaging, right? How the product is displayed is really going to drive customers over to actually experience the product and then potentially make a purchase. We're not seeing quite as much, or at least self-reporting, customers saying that, social influence or social media is really driving as many of those purchases. But at least from a demographic standpoint, we are seeing that those younger demographics are definitely more influenced by social media, by that kind of social influence, with almost a quarter of those customers saying, that is driving them to make impulse purchases. Whereas we get maybe, outside of that into the 45 plus category, those consumers are definitely less influenced by social media, social influence, and much more, focused on those limited time offers, those discounts, really looking for kind of those deals in many ways.
Yeah, and the one interesting observation I would add to this is limited time offers and discounts is the biggest factor that would contribute most to impulse purchases in physical retail, and physical retail customers tend to be less promotional and discount oriented. So it's interesting to see on one hand that discounts are what get them to impulse purchase. But even in the aggregate, the retail channel tends to have a higher margin because of fewer discounts, less promotionality actually needed to push the sales in that channel. So I think a pretty interesting pairing of what would seem like contradicting data, but kind of makes sense when you kind of peel the onion back.
One of the first things that we definitely like to recommend to all our customers, and kind of going back to Andrew's point around, many retailers kind of cutting staff, is, really making use of traffic data to better staff, create better staffing models and better allocate labor to when traffic is coming in, right? So making sure that, we're not staffing towards transactions, which can be kind of a lagging indicator of what your opportunity would be, but really staffing for that traffic, right? So when we see trends of, you're seeing maybe higher traffic on a Friday, but for whatever reason, we have 3 or 4 fewer staff members on that Friday time period than the Thursday, really looking into why is that the case? Is there something else going on in the store? Are we doing more, inventory or, other sorts of, restocking on the shelves at that time? Can that be shifted to another time period? Can we shift that labor to better make use of when we have those customers in store to actually try to get them to convert, try to have them do more selling tasks, right? To really, in many cases, right, be available for those customers who want to make use of the staff and ask them questions and really interact with them to, better help to drive the better experience in the store and ultimately drive that conversion. And then, another key great way to use this data, and more so understanding kind of in-store dwell and traffic data, is really understanding the causes of non-conversion, right? So understanding how many zones are customers visiting and interacting with if they're a purchaser versus a non-purchaser. What are those areas that tend to really drive purchasing behavior versus those areas that, maybe don't, right? Are people bypassing a fixture at the front of the store, not interacting with it? How can we maybe make that display more interesting, more effective to really help to drive that purchase and really ultimately capture the attention of the customer and ultimately make them make a purchase? And then with the final point is this data is also great for sharing and monetizing, right? So especially for those brands that are selling, or those retailers that are selling multiple brands, how can this data be shared, right? So understanding, what are those opportunities, right? In many ways that we kind of consider e-commerce data, where you can get impressions or clicks, right? And you can share that data on the online platform. In the physical store, we have the same ability to do that by looking at traffic to particular areas, traffic to particular brand zones, dwells in particular brand zones. If there is any sort of kind of brands providing their own staff in certain cases, right, where you might have someone embedded in the store to help to kind of sell that brand, that can be useful data as well to share with your partners in order to make them make better decisions on when they can have those staff members in store to really help coach up the customers in understanding, what the opportunities are, what the products are, and how to use the products, and how they can best, use those products in their everyday life as well. With that, I'd like to thank you all for joining today. I'd like to thank Andrew as well for joining today, for providing his great insights. It was a pleasure to get his thoughts on everything as well today. We do have the full data available for the U.S. Consumer Sentiment Survey that is going to be available. You can access that through details that we'll provide at a later date. We will also be having another session in February, kind of as a recap of the holiday period, planning for the 2025. This session that we expect in February will be held live. It will include more of a roundtable discussion for guests and will also be closed doors. So please RSVP as soon as possible to secure your spot. And we would also be spending a special gift as well as a part of our executive session experience.